Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, November 30th, 2018. So we're looking at stocks which are approaching overhead resistance that could lead to a W-shaped breakout. We'll look at 4-hour charts for futures that look kind of promising. Healthcare XLV breaks out to fresh highs. Utilities could be leading this charge higher for S&P 500. We'll look at junk that should be moving higher, but it's not really. NAFTA deal may be stabilizing Canadian dollar. We'll look at some of the forex action. Would avoid either one of the gold trades, long or short currently. Natural gas, pretty bullish action, and we'll look at oil as it hits fresh lows, and cryptos are again doing nothing. So throughout this presentation, very briefly, I'll be mentioning my indicators. You can find out more about them by going to MasterChartsTrading.com. Click on Alerts and Indicators, and then you can find out more about them. The indicators I'm referring to are these 4 lines in the chart. This green, blue, red, and yellow line. So you can also see them the actual numbers, the values for these lines are on the right here. And these lines are calculated. This is a mathematical code. You can see that it's a plugin. You can have the same lines on your chart. Simply send me a message. So here on this chart, what I'm looking at is futures S&P 500 approaching this breakout level of 2790. In the past, notice that we tried to do the same thing. We tried to approach these breakout levels on October 16, and then again on November 7th. So far, the action has stopped, and I'll show you the 4-hour charts in a minute, but action stopped somewhere around 28:20 or so. So we'll see if this breakout will be the charm, and if it is, then we can see a pretty nice looking W formation. If this is indeed a correct, or rather genuine breakout, then we can expect a move of about 8% after the breakout, just judging from the depth of this pattern. So this would most likely put us into the fresh highs territory. Just a few weeks ago, I was quite cautious and approaching bearish levels, and you notice that we had a relatively significant rally off the lows, 23rd of November lows, 2018 breakout here above this intermediate resistance at 2685, 2686 maybe, and then a rally higher. So overall, this is beginning to look like a beginning of a new breakout. Utilities are moving higher, and basically this are approaching fresh highs, and I like the way these indicators are curving down. So this to me means that the price will have more distance to travel towards bearish levels, and bearish levels for utilities are way down here at 48.86. So this breakout in utilities potentially could be a very positive sign for stocks. Alright, so let's look at the futures, the S&P 500 futures, but on a more zoomed in charts, on the 4-hour charts. And you can see that here on this chart on the November 7th, you can see that the 4-hour candlesticks topped out around this blue line 2816. So notice that I zoomed into the 4-hour chart, and the price action still shows quite, catches quite nicely by my indicator lines. So afterwards we saw a drop, and here on the 12th of November I see a close below the red indicator line, and then we saw a successful push down by the bears, and it was a significant push down. But now it seems that the bulls are again having the upper hand, and notice the indicator lines are curving down. So again, the price has less distance to travel towards bullish levels, and now the bullish levels are 2805 on this 4-hour charts. So you can use the same indicator lines on the 4-hour chart. You can put some ridiculous time frame like 8 minutes, for example. Here's an 8-minute chart. And you can see that very similar. You can read the price action, for example, right there on this chart. You can see a breakout, and I would be basically buying here with a stop below this red line, and notice a big, rally afterwards. So you can use this my indicators intraday, or you can use it on daily charts. Now I normally trade on daily charts. This is Dominion Group. I normally trade on daily charts, and for me it's okay because I can sit there and just sit in the position for a long time. But some people prefer to trade intraday, and like I said, here are S&P 500 futures, and we can do a 1-minute chart. It makes no difference. Here on this particular chart, for example, there's the breakout, November 30th, today at 13:30, and then I would be basically buying it, hopefully right there, set a limit order, and boom, big rally afterwards. So again, you can use the indicators on pretty much any time frame. My caution to you is usually intraday is more prone to whipsaws, and you will have more failed trades most likely on the intraday chart. On the daily charts, I think you can easily approach 70 to 80% success rate. Alright, so let's look at some of the recent trades that we did here at MasterCharts Trading. Here's, for example, healthcare, XLV. All of these up arrows are basically alerts for my subscribers, and so I actually sent 4 alerts. All of them, in my opinion, were successful because, again, my stop would be not below the recent swing low. And recent swing, for example, for this trade that occurred on the 15th of October, there's a popular trading system where they say, okay, enter below the recent swings low. So this is the recent swing low, and if you put a stop right below it, then you would have been stopped out right there. My stop is way down below here, and by extension my position would be smaller, but it's still going to be large enough to make it worthwhile. So here we have multiple opportunities, and all of them were successful, just depending on where you put your target. But this is definitely a successful trade because we're approaching fresh highs. So overall, looks like healthcare is in very good shape currently. So I already showed utilities. Here are the utilities, XLU. Approaching fresh highs. These are already new highs here on November 20th. So, and I like this, again, the curving of the indicators downwards. So that means that we're seeing the price that the distance that the price needs to travel towards bearish levels, which are currently at 48, has been increasing from the current price levels. So a breakout in utilities seems to be indicating that the interest rate sensitive sector, such as utilities and real estate sectors, are perhaps feeling that the interest rates may come down a little bit, and actually kind of that makes sense. Here's, for example, TYX 30-year Treasury yield. It's basically the opposite of TLT, the 20+ year Treasury bond fund. You can see that bonds are approaching this yellow line from the bottom. Those are the fresh lows. So if you are an aggressive trader, you can try and short here. For example, I would short here on 28th of November if I was aggressive, but I'm not. So I would have been, if I'm going to short this security, then I'll wait until we get to 118 here. But the interest rates, here's TYX, the 30-year Treasury yield. I think it could drop to maybe this blue line, 31. So that's a pullback of about 4% or so. This would mean that interest rate sensitive such as utilities could continue higher, and it seems congruent with the action in the stock markets right now. It seems that the utilities want to go higher, and I think stocks may also want to break out here. This is looking more and more like a W formation that could result in a nice gain there. So let's keep an open mind. Junk bonds rebounded off a 52-week lows towards, again, this yellow line. You can see that this would have been the aggressive levels, and we can just mark a level there. Let's just pretend that we are super aggressive and we just went ahead and shorted junk bonds. Let's see where it goes. Now again, I'm not aggressive. I would, if I was to even do that, I would wait until the price gets up to the red line. That's, for example, here in August and again in October, because you have less risk. Because where are you going to put your stop? I will put my stop above the blue line, which is currently at 36. So you can see that the risk is increased the further away from price action you take a position. So with junk bonds, ideally we should see a rally to around 35. That would help S&P 500 and stocks in general, because stocks and junk bonds correlate highly. So we can expect stocks and junk bonds to move in a lockstep with one another. Alright, let's look now at NAFTA, new NAFTA countries. So United States I already showed. Here's S&P, looks bullish. Let's look EWC, let's look at Canada. Here's Canadian stock market at fresh lows. Notice here's the avoid from 10th, 11th of October. So in other words, my subscribers, I send them to, for now, avoid it. If or when Canada gets up to this line at 28.79, then we could potentially start looking to buy it. On this chart, so far I don't see a big effect of this new NAFTA agreement. When I get to the Canadian dollar, then we can, see if maybe there is price action that's indicating that maybe we see a turnaround in the Canadian dollar. But on this chart, it's very difficult to read any kind of bottoming action yet. Maybe we're seeing bottoming action, but again, to turn this ship around, we need to see a rally to 28.79 currently, which is up here at the blue line. Here's EWW, Mexico. This one really collapsed, and notice here the avoid on the 24th of October. This is for my subscribers, and another almost over 17% drop afterwards. So, at the very least, you need to know when to cut your losses, and you will have losses obviously in trading, so hopefully you have no illusions of that. And that's why you have risk controls. And again, I teach all of that stuff at MasterCharts Trading. I teach all about risk, trading psychology, trend identification, and all of the videos that go, and all the training that actually goes into these indicators and how to use them. So for now, both Canada and Mexico are still in downtrends. For Mexico to become in an uptrend, we need to see a close above 48 here. For Canada, above 28. So still a long ways to go to see if the effects of this new NAFTA agreement will even be felt. Well, let's continue to the dollar. So here's dollar DXY. On this chart, we are seeing new highs right there on 12th of November. So this is a bullish chart. For now, I see no any kind of indication that this particular chart is reversing. Notice again price action right there around the green line, very telling. Price comes down towards the green line, price comes down towards the green line, and it bounces off. So for now, this is a normal bullish behavior. Let's look at Canadian dollar, USD CAD. Here's a latest alert for my subscribers. I actually opened the position, but I got stopped out relatively prematurely at a profit. But if you didn't get stopped out right there on the 24th of October, then you can have as much as 367 pips gain. And you know that if you trade Forex, this is a significant gain. I'm not doing anything out of the ordinary. Again, I'm right there on the. I can just show you my reasoning. So basically, there's the breakout, additional rather signal. I mean, we have a couple of signals before, and again, my stop would be below this red line. For Forex and continuous commodities, I usually put a stop below the red line, and vice versa. When I go short, I would put a stop above the blue line. So anyways, here's on October 10th. This would have been a very nice signal for me, and I actually was just waiting to get in, and I got in basically right at the blue line. Sent an alert to subscribers as well. The position went in our favor almost immediately. I got stopped out a few days later during this volatility spike on 24th of October. I wish I didn't get stopped out, because notice that this security moved significantly higher and as much as 367 pips in our favor. So hopefully the subscribers were able to get in. So this candle I'm going to zoom into it, on 28th of November. Maybe there is some sort of this possibly looks like a shooting star. So this action may be indicative of rejection at higher prices. And so perhaps the Canadian dollar will gain in price now somewhat. So for example, here's D61 exclamation point, Canadian dollar futures. Very much similar to what I was showing with just USD CAD, but similar idea. Basically, we sell or short on breakdown below the red line if this is a bearish security, and this is a bearish security because we have already closed below the red line, and then basically we're just waiting for a pullback. There's the pullback towards the red line in September of this year. And there is the signal right there on the 24th of September. You can see that I'm not really doing anything magical here. I would have put my stop above the blue line, so I would have set through this volatility, potentially shorted again right there on the 5th of October, and this would have been already a profitable trade. And then potentially shorted again right there on 17th of October, and this would have been a super profitable trade, because notice how big the move afterwards unfolded. 2.62% for futures. It's a significant amount. Overall, again, the dollar is still in an uptrend. By extension, gold is still, I would consider it in a downtrend. So XAU, USD. We shorted gold via futures. Here's GC1 exclamation point. This is an actual alert to my subscribers right there on 24th of October. You can short via futures, or you can short via inverse ETFs, and there are available inverse ETFs. So for example, here's GDX, the gold miners ETF. Again, a couple of alerts were sent here on 17th of October, and another one on the 24th. Notice that it went significantly in our favor. Right now, I'm not sure what to do, so I'm sitting it out. I want to see at least a touch of this line at 2012, and then I want to see a touch of this line and a close below it, and that would be a signal for me basically. I'm not seeing either one, and the dollar is kind of I think it could pull back. So I'm going to just wait a little bit with gold and see if maybe gold continues higher, and then we can look to short it again. Natural gas continues to baffle pretty much everybody that I'm talking to, but I don't see anything baffling about this. Here is NG1 exclamation point, which are natural gas futures, and I already mentioned it last week that an entire hedge fund was wiped out, I think, because of this type of volatility. I mean, look at this move. 51% move on the natural gas futures is an enormous move. If you are a subscriber, then you would have been quite successful because we have 2 alerts that went out. You could have bought UNG calls or UGAS calls or UGAS itself. So UGAS, let me see, let me just show you. UGAS went up let me see how much it went up, 198%. You can see that enormous move there, 198% on UGAS. A word of caution, don't analyze the actual UGAS, do not analyze UNG, only analyze the natural gas futures, NG1 exclamation point, or there's also a contract for difference, NGAS. So on this contract for difference, I wanted to show this very telling price action. And if you are a subscriber, then you have these indicators. You can just simply trade on your own. So for example, here on 26th of November, you can see that the price came down exactly to this blue line right there, touched it, and then rallied off of it. So if you had a limit buy, for example, at the blue line right there at $4.09, then you could have made very nice money already just from this tiny little move. So natural gas, very difficult for beginners to trade it, but sometimes could be extremely rewarding because it just moves like crazy, and sometimes it moves in your favor. US oil, CL, this is a crude oil contract for difference. There's the breakdown on the 2nd of November and the switch of the trend into a downtrend. And you can see afterwards, I'm going to show you on the futures chart, CL1 exclamation point. You can see that we went ahead and sent an alert to subscribers right there on 5th of November. Notice that the collapse in oil was 20% to actually yesterday. A fresh low was just made. This is a bearish security, so any bounce would be a good way to get short. Ideally, I would wait until we get to like $60 and then short it. Nothing really is happening in Bitcoin universe. Last few weeks we had another collapse, 37% from about 6,000 to now about 3,700. So pretty wild. And if we go peak to trough, I mean, it was at, what is it, 19,000. Yeah, so be on the right side of the trade. The right side of the trade for this particular security is still down. Notice I have marked here conservative short levels, aggressive short levels, and they're basically just yellow line and red line. And you can find out more about them at MasterCharts Trading, obviously. But this is the way I trade. I just wait. If a security is bearish like this one, then I will wait for a bounce towards the red line and then short it. Vice versa, if the security is bullish, for example here is S&P 500, I would wait for a pullback towards the blue line and then go long or buy with a or place bullish bets with a hope of the security going higher. So right now, overall, I just wanted to summarize that stocks seem to be wanting to go higher, and we should play all securities that we trade in accordingly without bias. Just look at the chart in front of you and avoid overthinking it, so to speak. Alright, please hit the like button, please subscribe to this channel, then head over to MasterChartsTrading.com, that's MasterChartsTrading.com, click on alerts and indicators, sign up for one of my plans. I think the best plan obviously is alerts and indicators, and at a yearly price, it's a killer price at $29.16 per month billed annually here. You get this indicators, you can trade yourself on your chart, on your interface, and once again you can trade on any time frame. Here's 3-minute time frame, and it works the same way. There's, for example, a setup. Actually, I would have probably gone long right there, just bought right there with a stop below the red line, and that's already a target right there. So easy to trade, and you can have it on your chart. I also send alerts, and I send weekly members only updates. So if you want just that, you can sign up for the alerts, and it's also a pretty decent deal. Alright, that's it for this week's recap. Thanks for watching. Have another great trading week. Bye bye.